Hi there, good morning. This is Buy Now Sell Now on ET Now with me, Shel D'Souza. Along with me, I have Somit Sarkar. And a great day to be anchoring together, Somit.
Well, yes.
Given the fact that the markets have hit an all-time high level, especially at the start of the week, isn't it?
But yeah, we did see some weakness. But again, we have seen recovery from that lows, from day's low at least. But yeah, weakish trend at least for today, except for Nifty IT and Nifty Pharma.
Absolutely, Nifty IT and Nifty Pharma are the ones that are in focus. But let's talk about the markets as a whole. And if you look at the markets right now, 22,000 scaled for the Nifty, 73,000 scaled for the Sensex coming in. So yes, great going for the markets, and looks like the momentum is just picking up. Like Somit said, yes, we saw some sort of a dip in between or so, but now we've recovered from those levels, and we are actually staying in those range bound territory. 0.7% uptick coming in for the benchmark indices, with the Nifty Bank moving in tandem with the benchmark. If you look at the advanced decline ratio, right now it is neck to neck. If you look at the NSE advanced decline ratio, and on the top gaining side, it is the IT pack that is actually ruling the chart. So it is Wipro that is the top gainer on the Nifty, 6.5% uptake. ONGC is seeing an uptick of 3%. HCL Tech, Tech Mahindra, Infosys are the other set of gainers coming in on the Nifty. While on the losing end of the markets is HDFC Life, that's seeing a substantial cut of approximately 3% right now. You have also Tata Consumer that's joined the club among the top three Nifty losers right now. 1.3% downtick coming in for Tata Consumers. Bajaj Finance as well as Hindalco are the other set of losers. Let's take stock of what the sectoral indices are doing right now and what's the picture there. And on the sectoral indices front is metal index, that's the top sectoral loser, along with media index. In fact, media index is the top sectoral loser, followed by metal. While on the flip side, you have the IT index, pharma index, and the PSU index that's seeing good gains. So that's the way how the markets are looking like at this point in time. Somit, like you said, it's IT sector and the pharma index that are taking actually leading the markets higher right now.
Thank you, Cheryl, for that. Now, moving on to an exclusive, distributors of HUL in Maharashtra have stopped supplying Taj tea. Now, ET Now has learned that amid margin tussle, distributors have decided to stop supplying HUL products in phased manner. Astha Chopra is joining us to give us more details.
Well, because of the conflict of the distributors and the HUL, we have known from our exclusive sources that distributors have stopped the distribution of the Taj tea. So this disagreement came up after the HUL has changed the margin structure. They just increased the variable margin structure by 30 basis points, and they reduced their fixed margin structure to 3.3 after 3.9. And if a company does not pay heed to any of the query, they will also stop the distribution for the Kisan products also after 26th. So this is we have got to know about the sources. So their main demand is that the fixed margin of the distributor should be fixed at 5%. If they do not pay heed to their demands, then they will keep on stop the distribution of their products, and this we have known from our sources till yet.
Thank you so much for that, Astha, for putting the spotlight on HUL and what exactly is happening on that distribution front. But yes, Somit, like you mentioned, all the spotlight will be on the IT sector, isn't it?
Well, yes, IT sector has been buzzing in trade, and we have Anisha, in fact, joining us to give us more details on that, given the fact that all four companies have come out with numbers, stocks have reacted. What now going forward, Anisha?
Well, looks like the stocks have reacted ahead of the curve clearly, because yes, the earnings were a beat, but not to the extent the kind of market moves that we had seen. And that's why you're seeing a bit of tempering down. PAP was up around 10%, but now it's cooled off. It's trading with a gain of around 5%, because yes, the earnings were a beat versus expectation, but none of the companies has actually called out the reversal of discretionary spend as yet. We did speak with all of the managements. TCS said yes, FY25 will be better than FY24. Yes, BFS has probably bottomed out, but we're still not calling the reversal of discretionary spend. Having said that, the silver lining is the TCS management did point to the fact that whenever situations like this occur, when there is an extended pause, there's a sudden pent-up demand that kicks in, and I think that's what Street is building in for FY25 now, that there'll be a pent-up demand, which will mean that probably we'll be close to double digit, if not the actual double digit in FY25. In terms of the other internals, across the board, you will see in all IT companies, there was a good margin performance coming in. The likes of Wipro as well as Infosys had taken the impact of wage hike this time around. Despite that, they have managed to beat the expectation on the margin fronts, and most of the EPS targets that we have seen, there has been a raise of anywhere between 0 to 3-4% thereabouts. That has been led by the kind of margin resilience that the companies have reported. TCS had already delivered 25% margin when that was the expected exit rate. Even for other companies, we have seen margin expansions happening, and that's another positive news coming in for the companies. Deal wins continue to be steady. However, of course, there has been a bit fall off the cliff because Q2 was very strong in terms of the deal win. So in Q3, we have seen normalization of that, and the commentary overall is turning out to be incrementally more positive than negative, and I think that's what Street is taking home with itself. Of course, in terms of valuations, they're not necessarily cheap. TCS 27 times and Infosys 24 times. Even the likes of HCL Tech have managed to inch higher to 23 times. Yes, they're off the peak valuations that we saw in 2020 when they had reached levels of 30, 35 times, but we're higher than the 5-year averages. So on the valuations as well, it's not necessarily cheap. So it's a glass half full, glass half empty, but given the market is lacking ideas right now, I think, guys, the Street is clearly latching on.
Yeah, Anisha, clearly the Street is latching on any good earnings, and I'm sure the Street is seeing it as half glass full rather than half glass empty. And let's put that question to our experts. We have Kunal Bothra as well as Shahina Muqaddam joining us on the show. Very good morning to you, Kunal, as well as Shahina. Shahina, we are meeting for the first time, I think, in this new year, so very happy new year to you. And Shahina, let's talk about the IT sector in particular, given the fact that top 4 IT companies have come out with good numbers, better than expected or better than what the Street was anticipating. And like Anisha said, any sort of a good news in the IT sector, everyone wants to latch on to it. Do you think that this good news will continue from here on? And do you think that the large cap IT companies will outperform the mid caps going ahead?
Well, very happy new year to you and viewers. Actually, the IT companies came up with very decent numbers, and considering that there's an under-owned sector, I think there is buying that has started to come back into the sector. Even if you see the numbers, order wins for the quarter, but if you heard the commentary, I think all and most of the managements were of the belief that this is going to be the year of bottoming out. And coming year, FY25, is going to be a much stronger year for growth. So I think to that extent, one is looking forward to, the year next year, where I think the earnings are likely to come back. We've seen a bit of improvement in overall margins, which I believe should sustain onto the next year. So I think next year should be a better year, and valuations, in my view, are still not too stretched. They are still reasonable, and we are seeing buying coming back into the sector. And I think one can take their pick in terms of the large caps. I would prefer TCS because while their American markets, US markets have not done that well, but I think they are pushing growth in the other markets. And as you mentioned also that the margins have moved up. So I think overall TCS, while remains the most expensive, in my view, remains a very stable, strong company to hold for the longer term.
Thank you for that. Thank you for that. Now, Kunal, I remember specifically that you were very bullish on the IT space ahead of the results. Now, given the sharp up move that we have seen in this sector, what is your view currently?
I believe that this could be a starting point. This may not be the ending point where these IT stocks may find charm across a lot of trading spaces, across markets, because what we've seen is a very distinct kind of a price and more of a volume action. Now, for example, on Friday, we saw out of the 10 stocks where there was long built-up formations, 7 stocks were from the IT stocks, and that includes the likes of Infosys, TCS, HCL Tech, Coforge, etc. So there was a huge build-up of long positions which has already started to happen for these IT names. The other 3 names, for example, the likes of Persistent, I think Wipro, etc., had seen a major unwinding of positions or short covering for these stocks. So I believe that when you see such kind of a strong price action and a skew completely from the volume spaces, it indicates that a new trend is in the making for these IT names. So, yes, one part is that these prices have moved up extremely quickly for these stocks. Maybe over the next 1 or 2 weeks, the prices may cool off a marginally bit from current levels just for the indicators to get back into a neutral territory. But I believe largely from current levels to say another 3 months or so, many of these large cap IT names and the mid cap IT stocks, I would probably expect to be at least 10 to 15% higher from where they are trading right now.
Alright, so that's the view coming in from both of our experts, and Kunal is of the view that this is not the end but the beginning of the rally that we are seeing in the IT pack, Somit. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the number that will be flashing on your screen very shortly. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. If you're already invested in the stock, then mention the buy price, the quantity, and the time horizon. In that way, we will be able to guide you better and direct your questions better to our experts. And talking about our experts, today we have Kunal Bodhra as well as Shahina Muqaddam. And once again, good morning to both of you all. And let me kickstart taking this query to you, Shahina. This one is coming in from Deepak Dave, who's a senior citizen, writing to us from Gandhinagar, and he's a long-term investor. He's saying that he wants to invest.
Maybe you can look at something like maybe a BHEL or BEL or some of those electronic companies, capital good companies also.
Again, the next query is for you, Shaina, and it's from Devadas from Chennai. Now, he's an investor. He's holding around 30 shares of Tata Elxsi, bought at a price of around 6,500. He's asking your view whether should he book profits or continue to hold this stock, and any other recommendation if you have to play the artificial intelligence play going forward.
Tata Elxsi, I think he can look to exit. While it's a good, strong company, I think valuations are a bit stretched still, and that has actually resulted in its correction. So he can look to switch to some of the large cap IT companies that we've seen have reported good numbers. He can take his pick over there. I think they are doing pretty well. And in terms of the new tech, the new age companies that he wants to invest in, he can look at something, maybe he can look at the IT sector itself, something like a Birlasoft. So I think that gives him that exposure if he's switching from Tata Elxsi.
All right, the next query is for you, Kunal, coming in from Anu from Gurgaon, and she has 100 shares of Data Patterns at a price of around 1,939 rupees per share. She wants to know what to do with the stock in the short to medium term. What's your take coming in on this one?
I would suggest to hold on to the stock. I think over the last 3 months, 1800 has been a resilient support for Data Patterns. The stock has not broken below this level, and every time the stock gets into a retest of that support, there is demand originating for the stock at those levels. On the upside, however, 2100 is a major resistance for the stock. So, till the time it's trading between this range of 1800 to 2100, you can hold on to the positions. A break about 2100 could lead to the stock coming back to even 2350, 400 levels over the near term. And for the trade, you can keep 1800 on closing basis as a stop loss.
Well, the next query is from Rajiv from Mumbai, and he's asking a short-term view when it comes to L&T Finance and BEL. Can he enter at current prices, Kunal?
Yeah, I think L&T Finance could be a good bet. In fact, on Chartbusters, I was mentioning that the stock has this resistance at 175, but looking at the last 4 or 5 months of consistent uptrend from 120 levels, the stock could probably in the next couple of weeks maybe break past about this 175 mark. So in the anticipation, you can consider buying the stock at current levels. Keep 160 as a broad stop loss. If you're looking at it as a short to medium term play. For BEL also, I think the view would be similarly positive. It's done exceptionally well, been more of a consistent stock on the upside, now trading closer to that 185 plus mark. So would suggest a buy on the same. But for this, you can keep a trailing stop loss of 180.
All right, this one is coming from Tushar. He's writing to us from Delhi, and this one is for you, Shahina. He wants to know about the railway pack as a whole. He has Texas Macro Rail, about 1,000 shares at a price of 191 rupees per share. He's saying, considering that the government's thrust in the railway space is pretty, it's quite a lot. Also, he's expecting some SOPs to be announced in the budget.
Well, but with the bookings really picking up, travel picking up, I think that stock also should do well. So he can look to add both these stocks.
Shaina, the next query is from Reshma Bhatia, and she has around 1,000 shares of Steel Authority of India, that is SAIL, at a price of around 125. She's asking whether should she sell at a loss at current moment and invest that amount in some other stock or continue to hold.
Continue to hold the stock. you can keep a stop loss but continue to hold.
The next one is for you, coming from Matthew, writing to us from Kerala, and he wants to know whether he should stay put with Adani Wilmar in his portfolio. When he purchased it, the buy price was 850. Now the stock is sub 400 levels. So should he look to stay put with this one, try to recover the losses, or look to exit?
See, the best way, of course, is to exit the stock because it's been a huge underperformer. You can either shift to, peers in the same sector. For example, Tata Consumers is something which looks attractive. That's a stock which you can consider buying. ITC is, I think, coming back into a breakout mode, so you can consider that as well. But if you're looking at it from the Adani group of stocks, then I would probably recommend Adani Green as well as Adani Ports to be much stronger bets. So it depends on which part of the sectors or the group which you would want to move into, but you can choose out from these options. They could be relatively much better.
Well, as Kunal is suggesting a buy on Tata Consumers, Shaina, what would be your view? A query from Bangalore, Srinivas wants to buy 100 shares of Tata Consumer. He's asking whether is it a right time to buy at current levels. What is your long-term view here?
Yeah, I think he can look to add Tata Consumer. Being an election year, I think FMCG stocks, consumer-driven stocks are likely to do well. And Tata Consumer, with its expansion, they have added brands. I think that should do pretty well in the coming year. So he can look to add. I would also go with ITC. I mean, that stock also, after a long period of consolidation, does look like it's going to move up in the medium term. So he can look to add these stocks.
Okay, Kiran has written to us from Pune and a couple of stocks for a short-term target, Kunal. First is Morpen Labs, 1,000 shares at a price of 51 odd rupees. He also has NBCC, about 1,000 shares at a price of 84, and Zomato at 120 is the buy price. Similar quantity coming in for Zomato as well. He wants a 3 to 6 months target for these counters, as well as any other stocks that you recommend.
So, Morpen Lab, NBCC and Zomato, I would suggest to hold on to these names. Morpen Lab is going through a mild correction, but the medium-term charts are attractive. The stock formed a base at 25 to 30 range, and from 30 it's now almost on the verge of breaking that 50 mark. So, looks attractive. Same is the case with Zomato as well as NBCC. These stocks are also looking very attractive on their charts respectively on the medium-term time scale. So, I would probably suggest that stick to these names. And if you're looking to add to some other stock, depends on what market cap you're looking out for. But from the large cap names, I would still go with Reliance Industries. In case if the stock has formed a lower high pattern on the daily chart. So the previous high for the stock end of December, second half of December was around 266 to 70, and the recent high for the stock was around 238 approximately. So which means that for the first time after a series of so many weeks and months of price rally, the stock is showing signs of some bit of fatigue over here. Keep a trailing stop loss. I think 215 to 14 could be a closing based trailing stop loss for NLC India.
All right, so that's the take coming in on NLC India. Let's take the next query coming from Chandrika from Mysore. She wants to know whether she can buy IRFC at current price. Kunal, we've already, for a quick note for all of our viewers, we've already spoken about the railway pack. So you, according to Shaina, stay put with Texmaco Rail if you already have an investment in that one. IRCTC also looks very good, attractive at these levels. And IRFC, Kunal, what's your take?
Well, I would suggest to start looking to at least book out profits if you're looking to if you've already holding on to positions, not to buy fresh at current levels because of the way many of these indicators are. So I was actually looking at the RSI for IRFC on the daily charts. It's almost hit that level of 89.590 on the 14-period RSI on the daily time frame, and the weekly RSIs are almost 90 to 93. So the stock can move up higher, but then it's better to try and book out profits over here, or at least trail your stop loss to maybe a 120, 125.
Thank you, Kunal, for that. With that, let's slip into a short break and we'll address more investor queries post that. Welcome back. You're watching Buy Now, Sell Now on ET Now. Post break, the first query is coming in from Raja from Chennai. He's holding around 1,000 shares of Astral at a price of 1,987. Shaina, he wants to know the future prospects of this company and should he continue to hold or exit at the 10% loss that is currently incurring?
I think he should exit because PVC prices have come down, but raw material prices have gone up. So he should switch for now.
Kunal, we spoke about IT sector at the top of the show. You did say that this is just the beginning of the rally that we are likely to see in the IT space, and Mr. Ramamurthy is already benefiting from the rally that IT sector has bin posting over the last few months. He's asking, is it time to book partial profits at 25% plus in the IT stocks and buy back during corrections? Because generally IT sector is considered as cyclical sector. So you want your view?
Well, yeah, so the sector is cyclical, but then you also have to look out for the current positioning, because many of the investors and traders would probably have missed out on the fierce rally, because it's been a sudden rally for these stocks. And when there is a certain bout of rally, the correction for these stocks is ideally very shallow. So I don't expect that these stocks would get into a very sharp correction. I'm talking specifically on the large cap names likes of Infi TCS, Wipro, HCL Tech, etc., where I would believe that the correction could be a lot more shallow as compared to maybe the mid cap end, where the correction could be a bit steep. So it depends on your positioning. If you are in from the large cap IT names and if you're still holding on after a 25% profit, I would probably expect that you should continue to hold on to your positions.
And the next query is coming in from Pratiksha from Oman, and she is holding shares of both Glenmark Pharma and Lupin and making a profit of around 14%. She wants to know whether should she continue to hold or sell. Shaina, what would be your long-term view when it comes to Lupin and Glenmark Pharma?
Well, see, the pharma sector as a whole has done pretty well, and all stocks in pharma, including Glenmark and Lupin, they have done very well. But these are not my long-term top picks in the pharma sector as of now. My top picks remain to be Aurobindo, Cipla, Dr. Reddy in that order. I think these stocks have gone up. They have got certain positives, but I would take this opportunity to switch for the longer term into the other stocks. And I personally also hold them. So that's my declaration.
Right, this one is coming in from Krishnan KV from Bangalore, and Kunal, 2 stocks, 50 shares of SRF. He's seeing, I think, a loss of about 50 rupees per share on that particular holding that he has. He wants to know whether he should stay put with SRF or look to exit the counter for a period of 3 to 6 months as his time horizon. The other one is Kalyan Jewellers, 150 shares at a price of 200. Should he stay put with this one or book profits?
So SRF is a bit of tricky, because the stock in just the last 4 or 5 days of the correction has come back below the 200 moving average. And this is interesting because the stock has seen a golden crossover, and post the golden crossover we've seen the stock actually go into a correction. So this indicates that maybe the immediate weakness in the stock could get a bit more prolonged for SRF. I would suggest that keep a trailing stop loss, maybe 2,280 could be a trailing stop loss for SRF. And if the stock breaks below those levels, I think it could be a good time where you can look to exit. Kalyan Jewellers, on the other hand, looks to be a stock which is doing exceptionally well. Good time to book out profits over here and wait out for a phase of correction. In case of the correction steepens for Kalyan Jewellers, even if it's a short-term correction, I would believe that the stock can come back towards 353, 355 mark.
The next query is coming in from Halesha from Shimoga, and she has bought around 50 shares of Gland Pharma and at a price of around 20-30 rupees, while she also has around 200 shares of Supriya Life Science bought at a price of around 316. Kunal, she wants your view whether should she hold these shares or sell.
See, Gland Pharma is an interesting stock. The stock has recovered, I think, from sub 1000 levels. I think 850, 880 was approximately the low the stock had hit in mid of 2023. From there, it came back towards 2000 plus mark, now consolidating. So I believe that from a near-term play, the next 1 month to 3 months, I don't expect any major uptrend for Gland Pharma. Maybe the stock could consolidate. 2020, 2050 could remain the upper band of the range for Gland, and maybe closer to 1750, 1800 could be the lower end of the range. So I would suggest that if you're looking at probably booking out profits, maybe 2025 odd could be a good level we will look to book out profits. And in case if it corrects back towards 1800 mark, very good time to try and enter again.
Okay, this one is coming in from KVS Money, and this one is for you, Shahina. He wants 2 stocks in pharma and auto anch space that he can look to do an SIP for a period of 2 years or so. Which stocks do you think that he can look at doing an SIP in?
See, as I already mentioned, my topics in the pharma remain Aurobindo. I think there they are talking of a rights issue, and that would give some bit of a value unlocking. So to that extent, Aurobindo Pharma looks good. I like Cipla, the M&A activity that is likely, I mean, though it's not on the cards as of now, but there is a potential and valuations are decent. I like Cipla, products are very good. And third is Dr. Reddy. I think among the 3, it is also one of the strong stocks in terms of valuation and also in terms of products that they have, approved products for the developed markets. So these are my topics in the pharma sector. In auto anchs, I think he can look at something like I would prefer some of the four-wheelers or even the two-wheelers, like Bajaj Auto actually post correction. I mean, he can look for corrections and he can add some of the two-wheeler stocks and also four-wheelers. So I would prefer these to the auto iron stocks as of now.
The next query is coming in from Jyoti Ghai from Bangalore, and it's for you, Kunal. She has one lot of Indian Oil Corporation March futures bought at a price of around 132. ONGC one lot for futures bought at a price of around 207. She's asking your advice at what price should she look to sell because she's avoiding a rollover.
See, I think I'll start off with ONGC. I think on Friday, if I'm not wrong, the stock had seen an 18% jump in the open interest. I'm not sure of the data today so far. I've not looked at the current OI stance, but I would probably expect that the stock may see one more round of open interest built up. But I would also believe that the indicators are getting into a bit of a steep territory for ONGC. So it's a good time where you may look to consider booking out profits or at max maybe trailing stop loss to today's low of 225, 226 on the spot level. So you can probably adjust this towards the futures. For IOC also my stance would be similar. The fact that the stock is a bit more volatile as compared to the other two names, I would probably expect IOC to be getting into a zone where it may come back towards 130, 128 before it rallies back towards 140 plus mark. So since you've bought Jan futures, I would suggest to maybe book out profits and then look to buy back again on 130, 132 mark.
All right, Shahina, this one is for you. This one is coming from Abhishek from Bhopal. He has BHEL, which he's purchased at a level of 65 rupees per share. He wants a long-term view on this one. He's saying he's in no hurry to actually exit a BHEL and he's making healthy set of profits in this particular counter. What's your take?
Yeah, he should continue to hold the stock since he's bought it. The order book position is pretty good and even technically it looks good. So he should hold.
The next query is coming in from Lakshmanana. Now, he's a senior citizen from Bangalore. And Kunal, he's asking your view on Asian Paints. He has 75 shares. Is it worth keeping or divert partial money to Siemens and Titan?
Siemens and Titan, yeah, I think they would be better alternative. The only concern with Asian Paints is the lack of participation the stock has shown throughout the year, 2023. So stock has clearly made a pattern of lower highs. The momentum is missing. The participation of the stock with respect to the benchmark indices, that's also missing for Asian Paints, and that too at a point when crude has corrected over the last 1.5 odd year from 100 plus levels to now, just around that 80 mark plus minus $57 So I would probably expect Asian Paints to continue to underperform over the near term. Good time to make that switch.
All right, Kunal, this one is coming from Shivanshu for you. Tata Motors, he has this one at a price of 805 and Electro Green Tech at a price of 1,685 rupees per share. He wants a short-term view on both of these counters.
So Tata Motors on the spot levels is somehow facing resistance at this 825 mark. If you're asking me from a very short-term kind of a view, so maybe this 825 mark, the stock may try and retest those levels once again, give you a pop of another, 15, 20 odd rupees. So I think 840, 845 could be a zone where you may consider booking out profits for Tata Motors, purely if you're a short-term investor. For Olectra Green Tech, the stock has gone through 3 days of correction. Maybe one more come back towards the 1700, 1750 mark could be seen into the stock. That could be a zone where you may need to consider booking profits.
The next query is coming in from Dilesh Joshi from Mumbai. He's a long-term investor and is asking Shaina your view whether should he buy Garden Reach Shipbuilders and India Glycols for long-term at current prices.
Garden Reach does good. Shipbuilding looks good, but I would prefer Cochin Shipyard as of now. I think their order book position is pretty strong. So if I had to pick between the two, I would pick Cochin.
Okay, Kunal, this one is coming from Shrikant Gubbi writing to us from the south and he wants your view coming in on pharma, IT, banking or PSU sector. He wants to actually invest a huge chunk of money in one of these sectors. Which one do you think it makes sense for the entire investment amount to be put in, or do you think it makes sense to diversify?
Of course, it makes a lot of sense to diversify and because every sector will have its own phase time and again over the last many weeks. You can stick to the large cap names. You can look at Reliance Industries in case if there is a mild correction into the stock, 2700 odd levels could be a good zone where you may look to enter the stock. HDFC Bank, I also believe at current levels of 1670 approximately looks to be an attractive bet from a medium to long term play. You can probably consider ITC from the FMCG pack. That's a stock which has come back towards a good territory in terms of supports for ITC. So few of the names which have been highlighting would continue to reiterate them.
Okay, Kunal, another one is coming your way from Raja from Chennai. He's holding 2 lots of F&O shares of LIC Housing Finance at 585 rupees per share. He wants to know whether he should continue to hold or look to exit. He's saying that the stock price continues to fall as soon as it actually goes ahead and reaches the 580 mark.
So that's a clear demarcation of resistance for LIC Housing Finance. I think the stock made a high which was around 587.4 if I'm not wrong on the futures almost a week back, and from there it's been just consolidating. Now the volumes have dropped down for the stock, which could probably be a sign that maybe the stock is getting into a consolidation. But I would believe that in this kind of a scenario, it's better to have a trailing stop loss and then hold on to the positions, because if in case the volumes pick up again, the breakout should be on the upside for LIC Housing. So maybe keep a trailing stop loss of say 565, 569 for the stock.
Thank you, Kunal, for that. And with that, let's slip into a short break and we'll address more investor queries post that.
Hi.
Back here watching Buy Now Sell Now on ET Now. Let's continue taking all of your queries then. And this one is coming in from a viewer from Dubai. That's Drishti from Dubai, who has 15,000 shares of HCC at a price of 29 rupees per share. She's saying after the rally, it's on a downtrend. Kunal, any target that you have for HCC? Does it even make sense to stay put with this counter or look to book out profits, because she's making mild profits in this one already?
No, I think you should consider to hold on to the stock. Now, I understand that in the last couple of days, the stock has gone through a correction. But then, no, look at this prior to the stock, 1 month trend for the stock. From 28 levels, the stock moved up to almost 35. So it's bound to be that the stock may get into an odd correction. Also look at it this way, that the day when the stock had hit that 35 mark, I think 2 or 3 days back, there was a day when the volumes had jumped up exceptionally high. So that's generally a process where the stock gets into price volume breakout, then cools off for a couple of days, maybe a couple of weeks, and then the stock gathers momentum and then manages to break past above the previous swing highs and moves up higher. So I would probably expect HCC to continue to march up higher. Hold on to the stock.
The next query is coming in from Rajapan from Trichy, and it's for you, Kunal. He holds around 1500 shares of NTPC bought at a price of around 102 rupees per share. Can he hold for the next 6 months NTPC?
Well, yeah, I think exceptional mover, and I think you've already tripled your money from that 100 odd levels to now 314 plus mark where the stock is trading right now. You can expect that the stock may come back towards say 335 to 340 levels in the next 3 to 6 months. So if you have that kind of a visibility of another 6 months and want to hold on for another 7, 8%, 9% on the upside, then you can continue to do that.
All right, with that, let's kickstart with the rapid fire. A couple of stocks that RK wants to know, but Kunal, only 2 of them, KCP, NESCO and PNB. Are these good counters to stay put with for the next 1 year and look to buy right now?
KCP and PNB, yes.
Shaina, your view when it comes to HDFC Bank and Titagar Rail, should Srinidhi K from Bangalore buy or sell these counters?
The stocks.
It's Titagar Rail and HDFC Bank.
Yeah, HDFC Bank and
All right, this one is coming from Coimbatore from Madhavan. Kunal, Novartis India, he already has 15 shares at a price of 804 rupees per share. Stay put with this one or look to exit? What's the prospect?
Exit the stock.
Kunal, Adani Total Gas at 1160, should Jude from Mumbai hold or sell?
Hold on to the stock. If possible, look to average closer to 925.
All right, the next query that is coming in from a viewer, Venkatesh Varlu, who has 100 shares of Petronet LNG at a price of 199 rupees per share. How does the stock look to you? Shahina is making profits already.
I think you can switch from this stock. You can exit.
The next query is from Santosh from Trichur, Kerala. He has Valiant Organics in his portfolio, bought at a price of around 797. Should he hold or sell, Kunal?
Hold on to the stock.
All right, this one is coming in from our viewer Uday, who's writing to us from Udupi. He wants to know whether he should stay put with Utkarsh Small Finance Bank as well as Birlasoft or look to exit and book profits. He's not given the buy price, but what's your take, Shahina? For Utkarsh is 50 and for Birlasoft is 723.
Yeah, he can hold on both the stocks.
The next query is from Jay Shankar. Shahina, should he buy or continue to, should he buy or sell SpiceJet? That's his query.
That's a difficult call. I think he should switch.
All right, this one is coming from Kamal Mohan from Bangalore. 3,000 shares of Stride Pharma at 600 rupees per share. Kunal, what's your take on this one? What sort of a target should he stay put with?
Look out for targets at least of 750, 780 mark.
The next query is from Sanjeev Sina from Lucknow. He wants to know whether should he buy Nestle for long term at what price, Kunal?
So in case the correction steepens and the stock comes to a 2400 mark, that's a good support territory.
All right, with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Shaheen, as well as Kunal, for joining us on the show and talking about the IT sector in particular, as well as resolving all the queries. And with that, viewers, we are out of time on this edition of Buy Now, Sell Now. It's a goodbye from Samit, myself, and the team that put the show together. Stay tuned. Markets at Noon coming up next.